Sheila Lamb, and I'm with the Virginia SBDC Network. For those of you that are not familiar with our organization, the Virginia Small Business Development Center is a partnership program with the U.S. Small Business Administration, George Mason University, and local host institutions throughout Virginia. With 27 locations across the Commonwealth, we provide training and technical assistance to small businesses and their local communities. Our one-on-one advising services are available at no charge. Today's webinar, using SBA finance tools to grow your craft beverage business at home and abroad, is presented by the Virginia SBDC Network. We are recording today's presentation and it will be posted on our website, virginiasbdc.org. Due to the large number of participants, everyone's microphone is muted. But if you have questions during the presentation, you can type those into the Q&A box. We have also enabled the live transcript function, which you can show or hide via your own meeting controls. And now it is my pleasure to introduce the Virginia SBDC Craft Beverage Assistance Program Manager, Chris Van Orden.
Thank you very much, Sheila. Good morning, everyone, and thanks for joining us for this conversation about supporting your craft beverage business growth through SBA's finance tools. As Sheila said, my name is Chris Van Orden, and I'm the manager of the Craft Beverage Assistance Program at the Virginia Small Business Development Center at George Mason University. The CBA program is designed to provide industry-specific technical assistance to Virginia's craft beverage sector. So today's program will be a free-flowing conversation on small business financing through the SBA. If you have any questions, please use the Q&A function rather than the chat function. It's easier for us to see while we're actually having this conversation, and we'll do our best to answer all the questions that come in either during or after the webinar. So with that, I'm excited to welcome Dan Pische, the National Director of Trade Finance at the U.S. Small Business Administration. In his current role, Dan oversees SBA's nationwide trade finance team. Dan also has over 15 years experience in the private commercial loan sector, during which time he helped facilitate the founding and expansion of many craft beverage companies. So today I'll be asking Dan to share some thoughts on how Virginia producers can use the SBA's finance tools to grow both at home and abroad. Welcome, Dan.
Thanks, Chris. I'm glad to be here.
Yeah, really appreciate you taking the time for our audience today. So I'd be willing to wager that a good number of the producers in attendance today are either partially financed by or in the process of securing SBA loans. But even so, I found that SBA products aren't always well understood. So maybe we could start by setting the stage a bit. What are the major categories of SBA financial products and how do companies access them?
Sure. I'd say the SBA's products fall into two general categories, loans being what most people think about. And then there are also some grant opportunities. I know, Chris, we'll talk about that a little bit, especially for those producers who are looking to grow or consider growing internationally. I'll paint the picture of the loan programs first. They fall into two general buckets, the SBA 504 program and the 7A program. The 504 program is capital expenditure focused, so think building and equipment primarily, a little bit larger scale. So this is going to be on the upper end of the size spectrum. And then there's the 7A program, which is what, I think if you asked the average business owner what an SBA loan is, they're thinking it's the 7A program. So 7A, to which the export programs that I manage are part of that suite, really is a beautiful framework because it can cover so many different needs under one general program. It can do everything, capital expenditure wise. So building and equipment, it's also better positioned for in the more intangible uses. So think tap room build out, think business acquisition, growth capital, patient capital, as well as working capital, which is what helps businesses operate and cover their cash flow cycle. That's a huge part of trade finance. So that's an area that myself and my team specialize in. But when it comes to the loan programs, those are the two general buckets. And then, when a business is considering what is the best program or product, it's counterintuitive as it might sound. I actually think it's better for them to approach for a business owner, and this is not just limited to craft beverage, but think about the need first and then the product second. So the lender might have a preference or might have an experience with one over another. And it's not about saying, I need this product or that product, like in a retail environment. It's more like, my business is growing. We've opened our tap room. We've opened our brewery. We want to add a tap room. We want to purchase a facility and add a tap room. Like, there's a number of different ways you can accomplish that. So I would approach it as more of a conversation before getting too far into the individual product. But there are also some grant opportunities, which I know we're going to touch on today. But one of the most relevant ones, especially for producers who are considering expanding abroad, is the State Trade Expansion Program. Essentially, STEP, as we like to acronize it, it helps businesses cover some early stage costs related to international expansion, and it's a full grant program. It's administered through our state partners, so appropriated at the federal level, moved out to the states, and then the businesses actually apply through the state. So mostly loan, but there are also some grant opportunities out there.
Yeah, that's a great point. We always want to make sure that if there are grants available, people take advantage of them, right? Not all dollars in or count the same. And if ever anybody, especially in the international front, the Virginia SBDC International Business Development Program, can help you determine what resources are out there too. There's a lot out there. And just before I move on, I want to make sure that you mentioned something in there that I think sometimes people, if they haven't accessed SBA loan products yet, they might miss, which is the fact that they're not coming directly to you to access those loan products. They are going to banks. So can you just describe a little bit about how that works?
Sure. So when it comes to the business loans that we do, that we also at SBA, we oversee the disaster loan program, and that is a direct program. But for all the other loans, we work through our lending partners. So there's 2,000 lenders who are active with SBA loan products that can be everything from credit unions to community and regional banks, all the way up to your large money center banks. So pretty much full spectrum of offerings in the country who work with our product. So we do not make the loan directly. The underwriting, the lending decision is made through our lending partners, and we also interface with the SBDC network, which is why they're such an important partner of ours. So when a business is actually accessing a loan, I think that's one of the misconceptions that's really out there, is that we're the one making the loan, and in reality, we're not. In some ways, we're almost closer to an insurance company, and we'll touch on that as we give a better overview on how the program is.
Great, thank you. I appreciate that. I want to make sure, especially since people, like you mentioned, EIDL, people came to the SBA for
Yes.
fund, which is an anomaly in general. But and I'm particularly grateful that you're here with us today, not just because you have the international trade, you have experience as an actual SBA lender, but you also have deep experience working with the craft beverage industry. So you can understand that aspect of running a business. That's part of why we're having this conversation focused today. It's a different industry. So as everyone listening today knows, alcohol production businesses operate differently from other companies in lots of small but significant ways that it can be hard to translate into other things, whether that's lenders or your local town council, whatever the case may be. So in your experience, how can craft beverage producers position themselves to be more attractive to lenders?
Sure. So thanks, Chris. I mean, I've worked with a number of breweries throughout my career. I like to joke internally that as much as I write on SBA related matters now, the first published article I had was on brewery expansion through SBA lending. So I'll preface this as this is my personal take on it, not necessarily the industry's, and certainly I'm not speaking on behalf of the SBA, but this is just how I approach it. I am from Chicago. Very manufacturing centric area of the country. And I looked at craft beverage, craft brewing specifically as this interesting mix of manufacturing and hospitality. And that is how I framed it internally when we made, I would say, a little of a conscious decision to try and go after that segment. This would have been about a decade ago. So craft was kind of going through its massive growth phase. And Chicago was one of the, I think one of the areas that had a higher concentration of breweries. I think they're certainly at the top end of that spectrum today. So internally, I was an analyst and an underwriter at the time. And I was saying, like, look, we want to finance breweries going through growth. So we're a community bank. We didn't necessarily focus on the startup side of the industry. That wasn't in our wheelhouse. So I said, let's focus on the manufacturing side of the operation in their growth stage. So I tend to think about the brewing space on a continuum of manufacturing to hospitality. And I think the closer you are to your loan need being on the manufacturing side, the easier it can be to get when you get more over into the full leased tap room build out, right? Like it's I hate to say it, but it's a restaurant loan. You know, it's there's certainly some equipment there, but it's very similar to a restaurant loan. You're not necessarily buying the building, or the value isn't tied directly to the equipment. A lot of it's into the build out, the leaseholds on the facility, and that can be a tougher loan. Now, I will say that this is actually a really good spot for the SBA to step up with our guarantee program through whether it's 7A or the International Trade Loan Program, which I manage, because the lack of collateral or the weaker collateral that comes by way of building out a tap room or a lease facility is mitigated by the guarantee structure the SBA offers. And probably should just do a quick overview on how that works. Is that when a business gets an SBA loan, say looking at the guarantee programs, the business pays a fee. The fee pays for the basically insurance. Think of it as the guarantee that's issued to the bank. So the business gets the benefit of an SBA loan by way of access to capital of obtaining a loan. The benefit of the program is paid to the bank that covers them in the event of a loss. So the issue with the taproom side of that spectrum is that it's weaker collateral. So that's where the actual guarantee has the most value, I think, compared to, say, you're buying a building. You know, 80% is the kind of the industry norm for advancing on a commercial property. So the industry is kind of equipped for that a little bit better than it is for the build out component. So when it comes to positioning for success, which is what I'm, you know, as a program manager now, I'm always worried about, like, what's the way we can have the most successful interaction for a business obtaining a loan, right? How do we fit it in? You know, I think it really is about kind of good planning. I can't stress how important good books are and good financial statements and the ability to produce them regularly. You know, the joke I used to have back in my beer podcasting days was like, you know, I finance businesses, not art projects. And because I'm here, because, you know, when it comes to the operational side, I was really digging into that. You know, one of the structures I thought that worked well was kind of the two-prong approach. You had someone in charge of operations and the management, you had someone in charge of the actual production side. It's hard to do both those. I mean, they're two really full-time jobs, right? Especially for a growing breed in my case. So I think having kind of good market knowledge on where you're going to sell your products, and especially in this environment where, you know, in the craft beer space, it's been relatively flat. It's kind of that old adage about you only have one chance to make a good first impression. So coming with everything organized, I think is really important, and that's where being, you know, proactive and not, you know, when there's a request for documents, produce all the documents. You know, that just it's putting yourself in the best position. You know, underwriting is one of those areas where you're kind of looking for what's wrong. So if there's gaps in the narrative, if the numbers don't add up, if the story is not there, if it's incomplete, you're going, well, if I can see this, what else can't I see? So
yeah,
like
I think
all personal opinions on this one.
No. It's helpful to know. I mean, again, this is an industry that behaves very differently. You know, it might be business owners might be the first business they've owned. You know, obviously it's much easier once you have actual numbers to look back on rather than dealing with pro forma, sort of like projections going forward. But having all of those things ready, you know, understanding what your needs are, like you said, I really liked your point about going in and just saying, here's where my needs are, which product is best for me. So having an understanding of what your needs are, but letting, you know, your partner on the lending side will give you your options, right? Don't go in with one particular mindset. And if you do have a shortcoming on some respect, own it, right? Don't try to bury it. That's not a good thing. Right. But, you know, understanding what the motivations of the lenders are, right? I mean, that collateral is a huge part of it. And maybe that's the easier part to finance. So there's lots of different finance options out there, and loans are a big part of it, but it's not the only game. So, so with all that background, really, you know, helpful to kind of understand from the craft beverage, you know, perspective. You know, from this audience in particular, or in general, are there any misconceptions about SBA financing, you know, for the sector that you'd like to dispel, right now?
Sure.
Take the time and clear the air.
I think I touched on the first one a little earlier, which is kind of how the program works. You know, that the bank is actually, the lender in this case, is actually the one who gets the benefit of the guarantee, the loan loss guarantee. The business gets the benefit by obtaining the loan. So I think that's important just to understand. It's somewhat of a tri-party arrangement. You have the SBA, the lender, and then the business. And that think of our programs as a framework, not so much kind of the absolute. So a lot of times, not that I suggest that anybody who's listening to this goes and reads the standard operating procedure for our loan programs, but they set out limitations like shall not exceed as an advance rate, for instance. That doesn't mean that whatever might be allowed under a program will always be allowed under a program. So I dealt with this a lot in my previous career before coming to SBA, where, I read online that, this export program can do the following. And I said, yes, it can do that, but that doesn't mean I'm going to. And that was always a little bit of a misconception that led to some poor user experiences, right? Because all of a sudden the business is saying, well, wait, the SBA says I can do this. And then the bank is saying they're not going to do that. So what gives, right? And that's really getting back to that earlier idea of like, think about your request in the concept of what you're looking for, not in the concept of individual products. Like, I need an export express loan. That could be true, but it might not be. There might be other solutions. And, I like to think that our programs operate like a menu, that the different loan products of the SBA, from that 504 to 7A, to which the export programs are part of, are options on a menu, and you can select from that menu depending on your need and depending on where you're at in your business cycle. So that's probably the biggest misconception I see is kind of, what is the role of the bank? The lender, is in charge of making the credit decision, and as long as it fits within the SBA program, it can be used. They also might have conventional options. It might also have there are other loan facilities out there besides just what's offered by SBA. So, and then I guess it comes into like, what is the definition of small? So it's a pretty wide-ranging set of businesses. I mean, something upwards of 97-98% of all businesses in the country operate under small. There's about 33.5 million small businesses, of which I think 84% are sole proprietors. So if you think about how many businesses are actually sole proprietors, that we're clearly talking about employee-led firms here. So small is relative, and I'd say that for the most part, especially in the craft beverage space, that I think that the vast majority of businesses qualify, and that they can qualify at different levels. You can be a more established business opening up a larger production facility and be able to take advantage of 504. You could be you're past the proof of concept phase and you're moving into your first equipment purchase, right, into a leased facility, and use 7A or the Express program. So the product really offers support for businesses up and down the size spectrum. And again, let the business or the lender make the decision on what products are available. That's kind of some of the misconceptions I've run into during my career.
Yeah, that's very helpful. And I think it's good to be able to frame it that way of, hey, these are the sort of general guardrails that the SBA has in place for each of its products. Then it's up to the individual lenders to determine, okay, where in that space, how far along are we going to go? It doesn't mean that they're going to maximize, whether it's the award amount or whatever, the loan amount, whatever that might be. There's room for interpretation there. And it's also important to note that not every lender offers every SBA product. So, they may not, like you were mentioning before, in the lender that you were at previously, the small community bank, that was not trying to do every possible deal that came across this. That's the reality of it.
One other thing that I guess it'll help, I think it helps with an understanding of the role of the SBA without getting too wonky and into the lending side of things. It's the concept of credit elsewhere, which underpins all of SBA lending. It's the idea that this loan is not available conventionally. So if the business can get the loan conventionally, then then it wouldn't actually qualify for an SBA loan. So in the case of 504, most banks would, I mentioned 80%. So if you were purchasing a property, the business puts 20% down on the purchase, the 80% is finance. That's conventional financing. SBA can, 504 can support up to 90%. So like that's not that term isn't available, conventionally, would be an example of that. But if the business is, owned by private equity and well funded and extremely liquid, and they needed a $500,000 equipment loan, realistically they can get that conventionally just based on their balance sheet. So there has to be a need for the SBA loan, and that's again just why I think it's important for a business, really of any industry, to approach it as a conversation about what you need, and then let the menu unfold from there.
Yeah, that's an interesting way to frame it. I like it. And I should say, anybody who's in Virginia who's interested in pursuing one of these loans, you can come to the SBDC, whether it's the local office. There's no wrong door with the SBDC. We're familiar with all the different SBA lenders, whether it's local community banks or whatever the case may be. Obviously, if you already have a banking relationship, you can start there, but understand that there are multiple options out there. So do not be shy. Before we move on, there were a couple of questions that I wanted to raise now that came in from the Q&A. So someone asked that they've already obtained an SBA loan last month, congratulations, which was intended for operating expenses. Now, can I still obtain additional SBA loans this year for acquiring and setting up the production facility?
Yes, yeah, you can. There's not necessarily a prohibition on how many you can have. There's a kind of an aggregate cap. Right now it's $5 million under the 7A program. So yeah, you can certainly go back. The loans match to the use. So say you had a loan for operating expenses, and then you need to purchase equipment. Say you $100,000 piece of equipment, you can get a loan just for that specific piece of equipment, and that works totally fine under a variety of programs, offered by SBA.
Yeah, that's great. There's, again, given that you have different uses for these things, it might be advantageous to break them up because of the terms that are associated with them. That's where it comes into having that conversation, knowing, hey, what are the rates? What are the sort of timelines that you want to be on for these different things? Obviously, pieces of equipment, or we're talking about real estate purchases, that's significant collateral that you're,
sure,
financing there.
And I just to add a little bit to that, I would say it's definitely better to have first, the lender who made the first loan will likely have a lien on all the assets. So they are going to be the appropriate place to start when it comes to that second loan. To the extent possible, if you are forecasting out, for anybody on the line, if you're forecasting out, where you want to be in 3 to 5 years, it's good to think about what the steps are, just so you can have that initial discussion with the lender. First off, I think it actually benefits you because, lenders are relationship oriented. So the idea that, you make one loan and there could be another loan in a year and another loan 3 years after that is really appetizing to them. But it also helps them understand where you're going, and you're trying to find a mix. Some of the guidance I give, especially in the export space, is the first loan is not the hard one. That's actually the one where you're theoretically a negotiator and talking to multiple banks. It's that second loan where you're probably not out there, again, talking to multiple banks, that you want to be aware of their appetite to support future projects and what sort of projects they like. Sometimes, it can be a hard no. It can be a not right now. It can be get to this point. A lot of times it was, the question would be like, well, we want to get this. Say we want to open a second tap room, and it's like, well, where do I want to see it? Very generally, I'd say like get to a point where you can cover that second loan without any of the revenue from that second facility. So make sure that we can underwrite it based on the core operating business. That was just one way where that was my comfort level. So having that conversation ahead of time is really instructive in putting you in a better position to get a loan down the line.
Yeah, interesting. It's interesting to hear from somebody who's been on the other side of the table, with these conversations. So another question came in for startup businesses that don't have actuals to look back on. What options do they have when they're going to the SBA and they have to work off of pro forma financials?
Hypotheticals are always the toughest to discuss. I would say, the devil's really in the details in terms of what you're borrowing funds for. You are working off pro formas. There's no two ways about it. Like there's no other way to frame it. So if there's anything you can ever peg to previous performance. So say you were an employee at a brewery, say you were contract producing, you can take your contract, say you're having contract production, and you can extrapolate that into production, actually your own production, right? Anything you can do to help strengthen that. It really depends on what you need a loan for. I'd say a loan, I use the term proof of concept a lot. I think I might have used it earlier. That the proof of concept phase is one of the more difficult places to get a loan. I'm not saying it's impossible. I'm just saying it can be more challenging because a lender, taking the SBA out of the equation, a lender is really there for growth. They're not there for venture capital. And the proof of concept phase is really more in the venture space. So I'm editorializing a little bit now, but
yeah, speaking in general terms, I mean, these are good rules of thumb for people to know, and again, there's other financing options available. You could do a friends and family round to start pulling things together, start, building some assets. You can obviously go out and do equity, which is not right for every business, but if they want to go and actually raise funds privately and, bring in partners who have capital to bring in, obviously, whether or not you have the doors open, at least you have some skin in the game. But, all of this is part of a broader strategy that people need to, work on. It's none of this is easy. I'll do the pitch again. Come to the Virginia SBDCs, local offices. Every local office has, experts in dealing with sort of the financing of a business. So they can assist you with the overall strategy and, might say, this is the point at which it's going to be easier or preferable to go after a loan product.
One of the ways we interacted previously in SBA, I have to kind of like categorize my life into two buckets, the pre and post SBA. That one of the things I loved about the SBDC network as a lender is the lenders, underwriters, relationship managers aren't really there to give advice, right? They're not there to say like, you should do that. It actually is a term called lender liability, that if we say, Chris, here's your business, go do this, and it doesn't work out, all of a sudden, the bank had a role in that. Whereas the SBDC is really geared for offering the consultation services. And I think that's why, now speaking from the SBA side of things, why the SBDC is such an important partner for us is that, through all the SBDCs across the country, they really are the front lines for getting businesses off the ground, and make a wonderful starting point.
Well, that is kind of you to say. It's nice to hear that from from the SBA head office. So appreciate that. So I think I'm going to move past this next question and get into the realm that you're in now.
Sure.
In your current role, you oversee a team focused on trade finance. So we're talking about international trade. Can you share some background on the financial tools that are available to producers looking to grow through international sales?
So I will start with the STEP program. I mentioned it earlier. It's the one grant program that's operating in the space we're discussing. STEP is, I think, one of the best tools available to a business who is looking to grow internationally. In localizing it a little bit to the craft beverage space, I think of it as website, so again, STEP can cover costs related to international expansion. It varies state by state. So you got, Chris, we've talked about Virginia's offerings where, we are, but the different states will have different programs. So it can be trade shows, website modernization, translations. I think that can be an important starting point for an established business who's looking to go abroad. On the loan side, I think that we have 3 loan products, 2 of which may have application for the brewing industry, which is the international trade loan and export express loan product. Earlier, I mentioned that the guarantee loan process is a tri-party arrangement. You have the SBA offering a guarantee to the bank. The lender offers a loan to the business. So the export programs have a higher guarantee, which means they can theoretically, increase the likelihood of getting a loan. But again, when it comes to international growth, I think that's really where you have the conversation with the lender. For a lot of producers in the craft beverage space, the international growth is probably going to represent a relatively modest but growing opportunity for them. So I don't necessarily know that it needs a specialty loan product at all times. But again, I would rather have more options on a menu than fewer.
Mm-hmm. Yeah, that's
Probably,
great.
I'm probably doing a bad job of selling my programs right now.
No. It's, I mean, part of this comes down to having people understand,
right,
if you're having this conversation with your lender, what's likely, even if you're starting to have those conversations with international buyers, is that going to be an option? Is the bank going to be interested in pursuing that or not? Is part of the strategy. We don't, on the international side of things, it's the other part of this equation, right? There's the craft beverage, and then we're talking about international. And again, Virginia SBDC's international program has lots of offerings on that front too. It's not every company should be looking internationally, right? That's the nature of it. It's, competitive. There are additional costs for sure. But, if that's something that makes good business sense for your individual company, make sure that if you're growing your business in order to accommodate those future sales, make sure that when you're having those conversations that it's included. You want to make sure that your lender is aware of that, because they may say, oh, well, actually, this means you might have this product might be the right fit for you. So,
yeah, I mean, a lot of times international, this is macro, not just for craft beverage. I mean, it leads to a diversification of customers. It opens up new channels. Obviously it has to be localized down to the individual company to see if it's worth it or not. And that's a very personal call for them. But as a lender, I would rather have a business who had kind of diversified revenue channels than, I have one customer, right? Like that's the most concentrated and risky of all businesses. But if you have some, even the ability to move around markets, a lot of times we always think it's US and international, but just imagine, a business at scale who's in one metro area versus multiple. I mean, if one area is a little bit slower, there's opportunities, theoretical as they are. The same is true internationally. And, that's, I think, where the SBDC is another, value add, is they can help evaluate opportunities and how they might fit in. And, there's pros and cons to different methods, and those all need to be worked through in order to see if it is a good, if it is the right choice at that time for the business. Yeah.
And that is definitely a reason that people, might consider looking internationally, is to, manage that risk. And certainly that is basically the business of lenders, and by extension, the SBA, finance programs, is managing risk, right? So by spreading out that risk, obviously there's additional resources for every new market you're in. That's going to be required to be successful there. But if somebody's looking to, isn't really comfortable with the concentration of risk in one specific market, that's something to be there. And a question did come in about the trajectory of craft beverage exports. Are we seeing that tick back up or whatever? Within the craft beer space, there was definitely a decline, just with, the limitation of on-premise consumption, right? That went down all over the world. People weren't being able to go out and have beer in particular, which was,
right.
How people a lot of places drink beer. And then all of this, and also with the supply chain, costs just shot up through the roof. It just became a difficult value proposition to get a product into a market at a competitive price. We're starting to see some of those things tick back up now. I think sort of the next round of data collection is going to be the real telling time when we're going to see, hey, are we going to resume the trajectory that we were on? Again, there's a totally different kind of trend lines when it comes to American wine. Cost competitiveness really big. I think growing the prestige of different regions, the state of Virginia, California is a name brand, the world over. You're starting to get there with Oregon and Washington. Growing this sort of stature of American wine, Virginia wine in particular, that's big. Spirits are its own thing, of course, as well. There's, anybody who is aware of the bourbon getting caught up in trade disputes. That was a difficult time for everyone on the export front, but thankfully most of that has been cleared up now too. So each are on its own trajectory, but you're starting to see that kind of resume the pace that the sort of growth trajectory it was on. And, I just want to, it's going to be different for every company, making sure that it fits your particular needs. So actually that does bring me around to another question I want to ask about this. We mentioned the sort of spreading out of risk. So are there other kind of reasons that you like to see for producers that are considering overseas growth? What are some of the motivations that you might see people considering?
So again, I think that taking advantage of sales opportunities is probably the reason why, right? I don't think a business owner goes, I need to diversify my customer base, so I'm going to open up international channels. I think that becomes a kind of a benefit that comes out of it. It usually is more sales led or more opportunity led. So there's demand for my product in pick your country, right? So I think sales tends to lead the opportunity. And then depending on, I think there's a little bit about capacity, right? Because again, I come at it more from the beer side, but recognizing that we're talking craft beverage as a whole, I think there's a capacity and demand question, right? And then, so if the demand is relatively flat in an area, you're looking for, how do you increase it? You can open up new markets, right? Whether that's opening up different geographies in the United States or internationally, that it's a good way to support growth, right? You have the local growth, which is what's been fueling a lot of the space for the past decade plus, right? Mm-hmm. But as the industry matures, naturally the growth is going to be harder to come by. And I think that's where, tapping into international markets makes a lot of sense. Again, Chris, you just touched on everything from wine to beer and spirits. There's certainly, I'd say, a higher profile today now than there was 10 years ago for the craft side of that industry, right? Wine's always had that niche following, but if you think about, craft spirits and craft brewing, that there's certainly more demand and awareness internationally than there was, in the early 2010s. So
yeah, that's it's a great point. The sort of segregation out of those things and the valuing of the craft angle of that.
Sure.
And I think the saturation aspect of that, the sort of sometimes it's helpful to think about a market, a foreign market that you might be interested in. Well, England looks like the US did 8 years ago, and France looks like the US did 12 years ago. So if you think about building a market, kind of creating some of that demand, but there's the level of saturation could be different. So some of it, hey, what's the right market for you based on what the landscape looks like and what timeline it's on? Not every market's going to follow the same trend lines, but the US is obviously pretty far ahead when it comes to the craft beverage space.
And having a view of what you produce, right, and shelf stability, and can you get it there in a timely manner that lets it be a good representation of your product, right? If you have something that has a shorter shelf life, think of like a hoppy IPA, and you're going to ship it to Asia, and it's going to be 90 days, then that's probably not going to work out terribly well. But if your product has a longer shelf life and can keep longer, you really have to be looking at what does it take to get it there and have it consumed in a way, especially if you're going to make a conscious effort to develop the market for more than just a single order, right? Single orders, I think, are kind of, you take them as they come across, but if you want to be more strategic about it and open up a market, or you see an avenue for your product in a specific area, I think you have to go into it with the intentionality behind it.
Yeah.
For the long haul. And
certainly a lot of that comes down to making sure you have the resources in place, right? This is in some ways a zero-sum game. Every resource that you allocate to one avenue is not being allocated elsewhere. So let's say that after tuning in today, a company decides, hey, maybe I want to explore SBA loan products to finance the growth, maybe potentially through foreign markets. What are some of the first steps that they should be taking to set themselves up for that success?
I think first is seeing how it fits into your production capabilities, right? There's, Chris, when we were talking kind of about putting this on, one of the things that's personally of interest to me is, companies, craft beverage companies, let's say, that went through an expansion phase in the late 2010s with the idea of bringing on, let's look at a brewery, right? We're going to bring, we're moving into a building, we're buying equipment, we have additional tank space. Obviously COVID threw a curveball to everybody, but outside of that, it's, okay, well, how is demand locally? Do you have additional capacity? Can you squeeze in orders? Can this be a way of kind of maximizing production or taking advantage of what you have? So first seeing how it fits and how it works into the business strategy for business. Then when it comes to, I think at the core of all exporting is the business plan for, what are your products? What are your markets? What are your, it's the typical SWOT analysis. What are your opportunities? What are your threats? How what's the strategy behind it? I think that's where the SBDC network can be really helpful. Then when it gets into kind of the financing side, again, you have the menu option, whether it's your lender, whether it's the SBDC, seeing what options are available to you, and what's necessary to support it. I mean, working capital is a huge focus of my office because trade runs on the back of working capital, right? You have capital expenditure, it's your equipment, facility. Working capital helps smooth out the cash flow, allow you to offer terms, purchase your raw materials, purchase your product, sell it on terms. So it's not that necessarily that, and this is, not every exporter needs an export loan. It's something that, that I discuss a lot. Like, let's see what is the most accessible and cost-effective solution for the business. And then from there, evaluate what is the appropriate product both now and in the future for that business.
That's great. Well, I'm going to zoom us out here for a second. And again, we'll add the caveat that this is, I'm asking Dan for his opinions or insights, personally, but I was wondering if you could just talk in general terms or sort of at the macro level of any changes in the craft beverage financial landscape that you've kind of seen over the past, few years, or looking forward, if you kind of see any trends that you think people should be aware of when it comes to, the financing of a craft beverage business.
Well, I think in general, the space is much more mature than it was, say, a decade earlier. So that is both helpful and challenging, right? On one hand, you have more awareness for the space just by the growth of craft producers of all shapes and sizes. At the same time, the industry has grown. I mean, the number of breweries in operation now compared to 10 years ago is significantly larger, so it leads to more saturation. You have seen some craft producers close. So there's a perception, at least it's out there that, it's maybe the sales aren't as easy to get. Again, it's market saturation, it's maturity. So that is something I think that has changed, and where there's probably a more discerning eye placed on the business operation. Again, I get back to that line about, we finance for business operations on our projects. That the business side, and this is, from lenders I know who still operate in the space, and they're much more concerned about the business acumen, the plan, the operational control, how they're taking care of their employees. Like, where are you going to get your employees from, right? I mean, that's affecting seemingly every industry out there right now. But I'd say there's certainly a greater focus on the operational side than there have been in years past. And that, I think, knowing about that ahead of time really puts you in a better position for success ultimately. But that's where I've seen. I mean, the availability of capital is still there. I mean, the SBA industry as a whole has grown considerably over the last decade plus. The modern era of SBA lending began in 2010, I would say, where the limit was increased from $2 to $5 million. So if you kind of measure from that period forward, the volume of loans, the number of lenders active have increased considerably. And there's ebbs and flows year to year. I mean, certainly COVID, again, threw a curveball there, but from an availability of capital perspective, I think it's out there. But now also, the industry is a little bit, the lending side of the industry is a little more focused on the operations, because that's ultimately how we get repaid. And that's, at the end of the day, another kind of joke of mine was that I'm not in a lending business. I'm going to get my money back business. It's easy to make a loan. It's more about getting the money paid back.
Yeah. So everything you can do to demonstrate that yours is a sound business that's, going to be able to succeed, and, come to us for assistance so that you're making the best case for yourself. I think it's really interesting that you mentioned the idea that, hey, now, individual lenders are going to be have a little more close attention to like the actual business case of this, for this industry. Would you say that the flip side of that coin is they're a little bit more familiar with the industry so there's less education? I mean, there's enough breweries and wineries and distilleries now that you don't have to explain to them to the same extent. Hey, okay, this is what we do. We take malted barley and we whatever.
Yeah, I think there's certainly a view, again, I don't want to say legitimate because it was never illegitimate, but just the legitimacy of the segment is certainly better known. In the beginning, I remember some of the questions were like, well, is this a bar? It's like, well, no, it's not a bar. And, I like bars too, but this is, they make their own product. And so you're right that there's a better understanding of it. Where I'd say like the more discerning operations, but also, how realistic the growth potential is, right? There's also a greater likelihood that the lender has other craft beverage companies in their portfolio. So they can say like, oh, they're expecting 25% year-over-year growth for the next 5 years. And they'll go like call up, one of their other clients in the portfolio, be like, hey, do you think it's realistic? And they're like, absolutely not. So, that's just where their experience in the industry, is going to be a little more dialed in. I could think of some of the conversations I had with lenders in the space, in the late 2010s. And it was like, wow, every brewery is doing so great, and that's, I'm sure a lot of them did very well and others probably not, but you can't just say like the segment's doing well, everything's going to be fine.
Yes. Infinite growth is not a business model. And, it's all the more so now that we're past that phase of, when you think about the lifetime of a SBA loan, I mean, that it's beyond that early, ramping up period. And especially, the industry turns over every couple of years with all new sets of conditions. So you have to make the case that, it's not going to follow exactly along the path that you chart, but that you have multiple ways to be successful. And really the end game is, bank, I will pay you back in full. I have more than one way to achieve that.
Yes, correct. Additional sources of repayment, I believe, is the technical term.
Yes. I'm sure there's a nice acronym for that.
There is. We have to have one. It's an obligation.
Yeah. Well, Dan, I really appreciate your time here today. I don't know if we have any other questions. If you do, feel free to add them now. But I guess before we kind of start wrapping things up, do you have any parting words that you'd like to share with our audience?
Yeah, I mean, I was thinking about it in the context of, being proactive. We touched on the need to have your ducks in a row, so to speak, right? Having your plan, having your financial statements there. I think being proactive and being your own advocate is really important. So, not just thinking about the loan at hand, but thinking about what's coming after it, and having that conversation, right? Like I do think finding a lending partner is a little bit like courtship, right? It's a two-way street. They make their money by making loans, and you're trying to find a partner who's going to, take care of the needs now and in the future. So you need to have that conversation, not just about like, I need this loan for this building at the end, but this is where we're going to go. What's the vision? Ultimately, I think it's going to help make a more informed selection. It's not to say that it's going to work every single time, but that as a business owner, you need to put yourself in position for successful near term and further out. And, when it comes to being your own advocate, I think it's having an understanding of what's out there, what the options are, and as I mentioned, it's kind of the counterpoint to my earlier comment about discuss the need, and then let the products move from there. You also need to be aware of the products, right? You can't just go into it blind and say like, I need equipment, or I need a building, or I want to buy a company. You also need to know kind of what's available, and then have the conversation with the lender, and then compare that against what might be out there as an offering, so that you can at least offer it up, or maybe say like, okay, this isn't, what they're able to offer isn't exactly what I'm looking for. And that doesn't mean that everything has to be, taken to the max allowable under the program, because debt eats up cash flow. And, one loan, you do want to work through your loan, and pay it off sooner, because ultimately if you have a loan that, say most equipment would typically be financed over 5 years. Yes, you can do it over time under SBA. And that might be the best selection, especially in terms of maximizing cash flow for the business in the early years. But then you got to think about, okay, well, what's the implication of having that loan out there for 10 years instead of 5 on future growth, kind of getting into that second 5-year period, because ultimately that payment's going to be there for their consuming cash flow. So it's good to have an idea of what's available, but also have in mind, be looking at what sort of cash flow you need to generate it. Earlier, Chris, I used that example of, how would I finance a tap room as from a credit department that didn't want to finance tap rooms. And it was, well, we're going to support it with the operation of the production facility. So get to a point where you can cash flow that loan. That's a pretty easy loan to get, especially when, versus, hey, we hope this is going to work, and we need every dime that's going to come out of the new operation to pay this loan. It's a tougher place to get. So
yeah. If you're cutting it super close, the only guarantee in this industry is that you're going to encounter something unexpected. So you want to keep a little bit of wiggle room in your model. One quick question that came in, and then I think we can wrap up. Somebody asked, they are actually opening they're a farmer who plans to make some products, including some alcoholic, with some of the inputs that they grow. Asking about farmers' eligibility for SBA loan products.
Yeah, still eligible. Every industry code. I'm not aware of any restrictions. I don't want to speak absolutely, because I don't really have an ag background, but I don't think there's any there'd be prohibitions, especially if you're producing your own product and selling it. So
yeah, especially for the production side of it. There are sometimes, there are some grant and loan products specific to the farming sector that you should be aware of. Again, just add it to the list of options that are available. Be aware of them. It may still not be the right, if you're looking to raise the capital for the production facility, it might just be, hey, let's do the SBA loan. There's more options, there are more lenders on that space than people who are doing loans that are partially financed through USDA or something like that.
Yeah, I work with the international folks over at USDA. Great team, amazing resource for anybody in the space. But what it sounds like is actually closer to a business function. I need a piece of equipment so that I can turn raw product A into finished good B. So
it's a whole world out there, the finance thing. And I'm actually very excited to share a series that Dan and I are going to be collaborating on starting next month. So the SBA, the Virginia SBDC, and the Brewers Association, the National Trade Group for Craft Breweries, are going to be doing a 3-part webinar series on exporting American craft beer. So we'll be sharing some of the flyers on that. It's going to be 3 Tuesdays every other week, starting in late June. So if you're interested, please register. We'll be sharing that information out there, but we'll be talking about everything from export readiness, trade finance, all of that, with this particular eye on this industry. So
yeah. And the principles we're discussing on that are not limited just to breweries. That the foundational elements, whether you're winery, distillery, pretty much. I think it's important that we approach them foundationally. Obviously, there'll be some localization to the beer space, but doesn't just because you're not a brewery doesn't mean you can't benefit from it.
Yeah. So stay tuned. You'll see that coming from the Virginia SBDC, and I imagine some of our partners as well. So we're looking forward to getting that going starting next month. But for now, Dan, I'd really like to thank you for your time and expertise. There's a lot of ground here. I feel like I could have picked your brain for another hour, but you're a busy man. So appreciate the time you gave our audience today.
I appreciate the opportunity to be here, Chris.
All right. Thanks so much.
I would also like to thank Dan and Chris for this fabulous webinar. And I'd like to thank everyone for attending today. You will receive an email with a link to the recording. If you would like to sign up for upcoming webinars or access recorded webinars, please visit virginiasbdc.org/training. These resources are designed to be used in collaboration with your local SBDC advisors. You can sign up for a free and confidential session by emailing help@virginiasbdc.org or via our website. We hope to see you at our next session, including those 3 webinars that Chris just mentioned, and we'll get those registrations out soon. So thank you all. I hope you have a wonderful rest of your Tuesday.
Thanks, everyone.
Thank you.
Bye-bye.